I think that March of 2020 was an inflection point. The cost of capital and the monetary supply expansion tripled. So everybody on Earth needed a store of value. It became very clear. I think that before March, it wasn't as clear. And I think from March until February 8th, you had early institutional adoption. And companies like MicroStrategy and Square and Tesla were all part of that. But I think that after February 8th, when Tesla announced that they had added $1.5 billion of Bitcoin to their balance sheet, I think we moved into year two, or the next stage of institutional adoption, where this became Bitcoin in specific or particular became an item of discussion across mainstream media. And as you notice, the CEO of GM got asked, and the CFO of Twitter got asked, and the CEO of Uber got asked, and politicians started getting asked, and it came across the pages of the New York Times and the Wall Street Journal and the Irish Times and the Straits Times and Fortune and Forbes and all sorts of mainstream media. So I think we're kind of early on in year two, but now it's a topic of discussion. I think that there'll be probably 3 years of intense, quote unquote, early adoption before we move to the next.
And
what
I think that one of the things, at least people that I speak with, it's the volatility. Is lower vol really critical in the adoption process, or are we just going to have to live with this vol because it's new, people don't understand it? The technology.
I think the volatility is falling consistently. I mean, it used to be in the first decade, the market was dominated by individual leverage traders looking to make a quick buck.
Right.
And then you had these parabolic runs, like goes up by a factor of 10 and it crashes by 80%. But I think that changed after March of 2020. And then the institutional money started to come in and they crowded out all of these early, leverage traders. And in the newer market, the institutional buyers are buying in an allocation in lieu of gold. And your use case is, I'm just going to buy 100 million or $1 billion of it, and I'm going to hold it for a decade. And I'm not buying it with leverage, and I'm not buying it so much to flip it. Like they have a different time horizon. And if you look at the trading since March, it was more like it runs up 25% or it runs up 40 or 50%, it comes down 25%. And it runs up 50%, it comes in 20%. And so the kind of volatility started looking like more common high growth big tech stock or something. And if you look at the volatility today and you compare the volatility of equities versus the volatility of sovereign debt versus the volatility of Bitcoin, they don't look that different, really. I mean, the other day, the 30-year treasury swaps, they jerked like 11, they were down. The yield on a 30-year treasury was off 6% in the day, or 5.5%. And it was the most volatile thing on my screen.
Right.
And so, I think that, first of all, if the asset's going to go up 198% a year on average for a decade, and that's the Bitcoin performance for the last 10 years, then incurring a bit of volatility to get 200% a year tax-free interest is a pretty good idea, because your alternative was gold, which is up 1.8% a year for a decade, or S&P, which is up 11% per year for a decade, or big tech via NASDAQ, which is up 16.7% a year for a decade, or long bonds like TLT, which is up 4.5% a year for a decade. So it's not even close. It's basically 20x better than equity and 100x better than gold. And volatility is a small price to pay. It turns out that the Sharpe ratio is better than any of those asset classes. So if you look at risk-adjusted returns, Bitcoin has by far the best risk-adjusted return in addition to the best risk returns.
Right. Okay.
And the story is the volatility is just going to continually decrease as the asset class gets bigger, as as you would expect, Bitcoin's 922 billion and gold's 10 trillion and S&P's 32 trillion and NASDAQ 17 trillion. So it doesn't take a rocket scientist to figure out that as the amount of monetary energy sitting in that network increases, the volatility will decrease. Likewise, probably the annual returns will probably decrease too, right?
Yeah, monetary energy in the network. I think there's an awful lot in there. And I wanted to, you mentioned taxation, you mentioned the public authorities. I want to kind of look at that. I mean, central banks, several central banks have talked about, some are even kind of launching plans to make quote unquote central bank digital currencies. These would be centralized, I assume, not decentralized.
Yeah.
Are they, what are they? They're not really like Bitcoin, I would imagine, that from the very get-go. And are they actually a threat rather than a sign that this is becoming adopted by the public sector?
It's not clear what they'll be. We'll have to wait and see. It'll probably take 4 years before we know that. But I think that we're looking at a duopoly system where you'll have assets. I mean, every investor is going to have assets. They're either going to be sitting in stocks, equity, bonds, gold, real estate, Bitcoin, and they're going to have some currency in their checking account, probably dollars. And as this grows, you know, those central digital currencies are really just dollars flowing over a digital network. I don't think they really change anything. It's kind of comparable to Square or PayPal plugging into Bitcoin. Mm-hmm. If I have the Square app, I can have $10,000 of Bitcoin in a savings account, and I can have a checking account.
Right.
And I can pay for my coffee with dollars.
Right.
And then over time, I will either sell the Bitcoin or I will borrow against it. Mm-hmm. Right. I think when the dust settles, the ideal situation is 1 billion people all holding Bitcoin as their store of value and then borrowing with a secured credit line in dollars and euros.
Right. And
then moving that over conventional payment rails. And those payment rails, you know, is it Visa? Is it MasterCard? In theory, a central digital bank digital currency could compete with Visa and MasterCard, right?
Correct.
But you know, will MasterCard and Visa like that? Will the government do that? And you know,
right.
Does it matter?
Yeah, right.
Like I can do things. I can pay a $20 bill with Apple Pay, and maybe it moves through the MasterCard system, or maybe I directly debit it with a CBDC.
Yep. I see. Yeah.
At the end of the day, it doesn't matter.
I mean,
you're looking at a bunch of currency circulating day to day, which is how you pay your bills. Right. And then you've got a chunk of your assets, your monetary energy sitting in a store of value, which you expect to appreciate over the long term.
Okay.